Let's get into it. Got a busy show ahead. Stock of the day. I thought this is one that's come up quite a bit on the call in the past. One of the, if you like, more defensive stocks, foundation stocks that a lot of our experts follow. The Charter Hall Long WALE Real Estate Investment Trust. It's a REIT. WALE means weighted average lease expiry. So it's in properties, blue chip properties with long leases to the top end of town and governments. It's come out and reaffirmed full year's earning guidance and upgrading next year as well. The REIT now expecting financial year 21 operating earnings per share of just over 29 cents per security, a solid 3.2% beat on the last fiscal year. Company even more optimistic for this new financial year, tipping operating earnings per share guidance at an increase of 4.5% as its portfolio grows with purchases like the 1/3 stake in Melbourne's Myer Burke Street Mall. Joining us later to hear from the Charter Hall fund manager, Avi Anger, is coming up in the next hour here on Ausbiz at 1:40. But Owen, what do you think of the trading update and also the Charter Hall WALE?
Yeah, great announcement. Obviously, all round, you want a reputable fund manager to be buying good properties at opportune times. So, I'm here in Melbourne. I'm about 500 metres from the Burke Street complex. And, it's a bit quiet at the moment, but it's a quality asset in probably the most populous street in Melbourne. So to get a stake in that at this time and to fund it the way they have makes a lot of sense. Obviously, Charter Hall has a very strong reputation in the industry. And I mean, in this environment, Koshi, it's pretty plain to see that if you can gear a REIT pretty conservatively, and you can also pass along a pretty good rental increase, and your shareholders can take full advantage of that. I mean, what's really not to like about it for a small part of a portfolio? It's growing modestly with a passing yield of around about 5 to 6%. In this environment, it's pretty favourable. Obviously, you have a lot of risks around property valuations and spaces in the city, but when you're buying high quality assets, that risk is mitigated, in my opinion.
Okay, and what do you think of it? Is it worth getting into at these levels?
I think, I speak to a few fund managers in the property side of things, and my current, feel for it is that across the board, if you're buying quality assets, you're going to be able to weather the work from home kind of malaise. And from before COVID, we saw about 1/3 of people in Australia reported working from home anyhow. And that's obviously increased, which is having an impact on CBDs. But I think, for a small position, you'd have it as kind of like an alternative income position, in my opinion, in a portfolio. So you would have it sitting alongside, not replacing a bond exposure. And for that, you're moving further up the risk curve, but you're getting more yield. So for a small position, yeah, Koshi, I think the Charter Hall Long WALE REIT is something worth looking at.
Okay. What do you think, Luke?
Look, it's hard to disagree with everything Owen just said. I mean, the acquisition today, it fits their modus operandi of high quality assets. You picked up the Burke Street Mall, but even the other two, it's a distribution centre based up in Brisbane and a commercial centre with Bunnings as a key tenant in Perth. So, all the metrics around the acquisition fits perfectly into their existing portfolio. As far as the stock today, I completely agree with Owen. It depends on how it would fit within your portfolio, but I think you're getting that sort of 5.5 to 6% yield in this environment. It's not too bad. I think it's quite low risk given the quality of those assets. For the investors who are seeking that income, and you mentioned it at the top there, Koshi, it is a defensive sort of company, so you're never going to get explosive growth out of this business, but if you know what you're entering into, that 6% yield is attractive to you, then I have to agree. I think it has a place in a portfolio for those sorts of investors.